Welcome to another Coffee with Samso, where we speak with ASX companies and hear their stories. We talk to the guys who run those companies. We're here at the UWA Club here in Crawley. Got Matt Boys coming back for us. Matt is Red Dirt Metals is the company. The code is RDT. Used to be TNT Mines, rebadged and effectively transformed the whole company. So we had a chat, I think May 21, and look, welcome back, Matt.
Thanks for having me. Yeah.
New story, fantastic story by the looks of it.
It is, yes. Yeah.
Can you
Fast moving.
Yeah, let us know.
Yeah. Okay. Where were we last time we spoke? I think we were just we were looking at Eureka and our Ridge asset, which is the two small gold assets we had. One just north of Kalgoorlie, and the other one just northwest of Paynes Find, which was really our focus at that stage. We were a gold company, and we commenced exploration on those two. And I think at that stage we'd also just about put out a resource update on our Eureka project.
Eureka, that's right.
Somewhere around about 115,000 ounces there at 1.4 grams, I think, from memory. So we were moving along quite nicely. The company had just raised a few $1 million, so we had money in the bank, and our focus was gold in Western Australia at that stage. Towards the middle of the year, as the company is always looking to access and evaluate new opportunities, and we looked at a project called Mount Ida, which was held at that stage by Abandoned Mining. Mount Ida was a copper gold asset that the directors of the company, both Alex and James and other individuals, had tried to pick up over the course of the last 10 years several times, and for one reason or another hadn't been able to complete the acquisition. We put in an offer for the Mount Ida asset as a copper gold asset in the middle of last year. We weren't successful at that first stage, and then in I think it was September, October last year, Orabanda approached us again to ask us whether we were still interested. We were able to put together an offer in a very short time, which eventually got accepted, and from that point on, we became what we are today, which is Red Dirt Metals. And obviously the story that developed during that due diligence period when we were looking at the Mount Ida asset was the fact that there was lithium-bearing pegmatites which had been drilled in the asset and really never fully evaluated or never fully explored. So we obviously saw that opportunity. We moved into drilling in November last year, and since then you can see what's happened with the company and with the asset and the growth and where we see the potential. So from our focus, which was initially gold, last year, we still haven't fully moved away from that. We still do some gold exploration, but we are almost entirely focused now on the lithium potential at the Mount Ida project, and we have what we feel is a very, very good project. We have 155 square kilometres of ground. We've only just started exploration really in November last year, so we've managed to drill in excess of 25,000 metres since we started. Really the only thing that's slowed us down more than anything else has been results from the labs. I think, like most people in Western Australia at the moment, there is delays, and those delays have caused us not to be able to advance the project as fast as we would like, although those assay results are now coming back in for the first 20-odd thousand metres of drilling. So we look to be in a really good position in quarter two to be able to continue the exploration and build up from what we've already discovered in the project. Our focus this year is to get to a first resource estimate and give the market some sort of, de-risk the project to an extent where we know what our scale is, potentially our initial scale, get an exploration target together, so get some idea of where we think we can be with, and that'll be helped by the fact that we're doing a regional geochem program. We're putting a bit more smarts into the exploration side of things than we originally started with, and get sort of the metallurgy box ticked, and then move towards some sort of financial scoping study and evaluation of the project and see where we're sitting. You look at the valuations that are being applied to companies that are a little bit further down the line than what we are, and I think there's huge upside potential for red dirt there.
When we think of lithium, I mean, lithium's been this hot sector's been around for a while, and obviously we get a lot of news from it. What kind of grade does a lithium project need? I mean, there's brine, I get that, and there's then the hard rock, and then we've got different types of hard rock. So can you give us a way they can understand how to look at red dirt?
Yeah, okay. Look, brine, I've had no experience with brine, so really it's not something I can comment on. Hard rock, I think, there's two main factors. One is the initial grade of it, then there's the mineralogy, so whether you have the right type of lithium, so whether you have your lithium in a mineral that can actually be extracted readily. That usually is, in Western Australia, it's usually spodumene. That's a word you hear thrown around a lot.
Yep.
Spodumene is extracted through dense media separation because it's quite heavy. So the grade isn't overly important as long as you're at the 1.2, 1.4% global in your resource.
Yep.
You're in a good place. What you need to be able to prove to the market is that 1% or that 1.5% contained Li2O that you have in your resource is then actually extractable. I think that's the key. It's one of the key de-risking moves. Or
you mean to be able to extract it out?
To be able to produce a saleable concentrate. We're doing a cider program at the moment. Pretty confident we're going to get some good numbers from that.
Yep.
And that will give us confidence that we've got a lithium-bearing pegmatite or several lithium-bearing pegmatites that then can be put through a plant, and you can create a concentrate that can be saleable. Now, all the concentrates are different from every single pegmatite in Western Australia. There's different factors involved in it. So maybe your iron content, which luckily for ours is very, very low, that can be considered deleterious or be a penalty. Whether you have a lot of mica in it, whether you're getting a lot of fines. So there's a premium paid for chips because apparently it's easier to process down the line. And all those sort of things, but that's really what you've got to look at. You've got to look at the quality, the type of mineralogy, and the grade. So there's a lot of factors involved in it. So a lot of boxes to tick. And so you can have a 10 million tonne at 1.5% and recover 60-70% of it, and you've got a very good project. Mm-hmm. So that's you look at Core, okay, Finnish project. They got I think 7.5 million tonnes or 7.7 million tonnes in reserve. They create a good quality DMS concentrate from very little milling cost, and very little capital cost, and they have a massive market capitalisation, and they have obviously a very good. They've got an offtake in place, so the product they can produce from even a small resource is creating excellent amounts of value for their shareholders.
Okay, and I'm assuming, like when you were talking about assays being late. When you're drilling in the pegmatite and you're looking at, you can actually physically see whether you're going to have something or not, right? Which is good for you guys in some ways.
It's very good, yeah. I mean, you know what you're looking at, but you need that confirmation. Yeah. When you're looking at pegmatite body, which you've already got assays for, and you know the mineralogy of it, you're fairly confident within a pretty sort of tight range as to what that's going to grade, and that's not the problem. The problem is when you're drilling a new pegmatite. Like we have pegmatites. We have 30 kilometres of strike, which we consider to be prospective. And the pegmatites are different. And so the pegmatites on the eastern side of the granitic intrusive, they're different to what they are on the western side. So when you're looking at them, you need a geochemical result on them so that you can say, okay, that's going 1.5%. You can look at, you've got spodumene, you've got lepidolite in it, you've got the minerals there, but you don't know, you can't confirm the grade until you get those assays back. And so that can slow you down because you've got 12 weeks, with up to 16 weeks we've waiting for assays. Things seem to be changing a little bit for us, so that, but it is a long time for you to be drilling and not have feedback on what you're getting. And also the market needs that continual update. They need to know what's happening. So that's been frustrating, I think, especially since we were in a really good position before Christmas. We just needed that information to be out before Christmas, and I think we'd be in a different position market-wise where we are today. But it is what it is. You just have to keep.
Yeah. I mean, when I look at your maps, your where you I know in one of your announcements you've got this nice a mag image, and you see the limbs that you guys talk about, and then you talk about your central zone and things like that. How much of that have you guys? Can you say we have worked on? Are we talking about
Probably about 5% at the moment.
5%?
Mm.
Okay.
What we're doing at the moment, we started, I think we started a bit back to front, in the sense that we had a database of about 4,000 drill holes when we acquired the project. And from those 4,000 drill holes, there was about 44 from memory, which had either lithium assays or pegmatites logged in the hole. Okay, so we had something to go on already. So what we decided to do is, the market was obviously hungry for information. We decided to go out and drill, and it was great, great success. Now what the company needs is, we need to be able to develop additional targets to what we're already drilling out and continuing to drill now. We need more. So we have started a regional geochem program. It's about 50% done at the moment, and that'll give us hopefully a series of targets on the area that's amenable to geochem. There's a lot of transport to cover, so the area that's amenable to that, which is still a fair portion, will be utilised for the geochem. And then we have a follow-up air core program, which we're just waiting for a POW at the moment, and when that gets approved, we're probably about 320 odd holes we've got. So quite a substantial program, which will then give us sort of base of weathering, sort of down to 50, 60 metres exploration over all the western limb and over some of the eastern limb as well. And from that, we can develop the next set of targets that we need to go and drill. So that's our priority for probably the next quarter, is to make sure we're in a position that we can continue growing the resources we have through to the end of the year.
Okay. And when you look at the project as a whole, and you can see some, I don't know, maybe it's a question. Can you see consistencies in how these pegmatites are appearing, and can you extrapolate out and say, look, it looks like down the road it's going to be similar? Can you do that?
Yeah,
at this stage?
To a certain extent you can, but I think we've noticed straight away the pegmatites are in place on sort of pre-existing structures which were in place in the mafic units sitting on the western limb of that granite. We don't have enough data. The problem is where we sit. We're not like in Ontario where you've got pegmatites sitting out of the ground. You can see them. They're buried, and there's a deep weathering profile up at Ida. It's down. It's the classic Western Australia sort of weathering profile. You've got down to 50 metres, which has been leached. The problem with the pegmatites is they tend to leach very quickly as well. So your lithium is mobile.
Yep.
And even though you may have remnant spodumene in there, where we are particularly, it won't have a lithium grade, and it'll have very little lithium associated with it. So when you don't have any outcrop, and you don't have any geochem, and you don't have any geophysics that you can utilise, you need to do that. You need to get that work. So for us to be in a position where we turn around and say we've got an exploration target of 50 million tonnes, we need to have that work done, and that's what we're doing at the moment. So that's where we'll be. That's the next step, really.
Okay. I guess I was sort of leading, or maybe you've answered the question, was how should people look, or should people look for to understand the potential, right? It's one thing for people to say, oh yeah, we got this, 20 kilometres of strike, but what should they be looking for from you guys to give signs for them to say, hey, maybe this.
Really? I mean, what should they be looking for? Results. I mean, that's one thing.
Yeah.
Proof. I think from the company's perspective, it's being able to demonstrate that we can actually provide that, can actually achieve that exploration target.
Yep.
That's our key goal at the moment, is to make sure that we put together a story based around what we've already done, which is going to go into a resource anyway.
Yep.
I mean, we're looking at a resource in Q3 this year, so that's one part of the story, pack it up. We have the metallurgy which will go in there as well. So it's a de-risking exercise in as such. And then it's add that exploration potential onto that and be able to quantify how much you think or the company feels that we can actually drill off. And I think we're going to provide all that information over the next 3 months. So that'll really sort of fill in the gaps for anybody who can't really quantify where we're sitting at the moment. And then look at comparables really. Look at companies that have another year on us, that are a year ahead of us, you know, and see where we sit with relation to them. I think that's the best way they can do a valuation exercise.
Okay. A touch of geology 101.
Yeah.
When we use this term thrown around, LCT pegmatites,
Yeah.
and it's actually lithium, cesium, and tantalum, right?
Yeah.
What's the significant LCT pegmatites? Everyone just goes, "Oh, you got a pegmatite, you must have lithium, right?"
It's the chemistry that makes them up. Those are the LCT ones. Those are the minerals that deposit out in a certain phase or fractionation of that particular
from the granite.
Yeah. So there's a lot of work being done to try and better understand what those distances are supposed to be from the granites, and some of them are sort of. We've got a buffer zone of about 3 kilometres set up around our granite where we think is prospective for that. It also comes down to the host, where they're being in place, but really it's that LCT fraction of the fluid that's coming out and deposited is the portion that is going to be rich in lithium, cesium and tantalum. So those are the three elements of value.
They're the type of pegmatites you want.
Those are the type of things that you want in Western Australia at the moment.
And I think the issue with those I have is that you only get the answer when you work backwards. And when you come from the other side, it's a bit of a hit and miss, right? Why you get that is still a hit and miss, I think.
I don't think the model is fully understood yet. And I don't think any individual pegmatite is the same. They're all different. And that's the hard bit, is your off-takers are having to deal with a product which is different from every single one of them. So.
In terms of your product, you talk about, you can come up with your deposit is as good as how much you can extract and things like that with the grade.
And the quality.
The quality. How much of those three components affect each other? Or are they if you know what I mean, are they going to be
value-wise
for you or against you if you get them in different proportions?
Oh no, I think you look at people who've got PFSs completed. Usually it's really lithium and tantalum which is going to be your value drivers. I think the tantalum at the moment, maybe because it's a product that comes also out of treating tin and other minerals. It's a byproduct of other processes. Yeah. So there is enough tantalum around as it is. So it is expensive. You do get value for it, but you're looking at a 10 to 15%. I mean, we do have a high tantalum grade in our project. It's sort of up around sort of 250 to 300 ppm of tantalum, and it's value additive, obviously.
A credit to the...
It is a credit, but the real one is the lithium at the moment. And sort of if you look at PFSs that have been done recently, you're getting sort of 80 to 90% is your value attained. The lithium and your tantalum is a small portion of that.
So it's not a case of we're in some deposit gold in copper. The copper can be an issue if you got too much copper in the process, etc. But we're not in that.
No, not in the process. No.
Yeah. Okay. So, what would make your life difficult for this project in terms of? Is there anything that is gonna be a barrier or make you fall off the horse in terms of geology, technical points?
I don't think so. I think really we're fairly confident that we're heading down the right road. I think, like I said, it's about understanding the asset you have to a point where you've de-risked each of those individual
so it's just a case of drill.
It's metallurgy, getting enough tons, and then and I mean we're on the 10-year is a granted M, so we've got a mining lease over the top of it. We don't have any sort of environmental heritage issues at the moment, or we don't have any at all. So I don't see any sort of major logistical or other issues being a problem there. So it really comes down to whether the deposit makes it from a grade and quality perspective, and I think and size as well. And I think we're going to be comfortably tick all those boxes. So There really isn't any. I don't see any fatal flaws with Mount Ida at the moment. No.
Okay. When I looked at this, as we had this discussion before we recorded, I looked at it. I go, oh, this reminds me of Mount Holland and how Mount Holland went from a gold project to a lithium project, and the geology is similar.
Mm.
And I haven't looked at all the others. Is there a type thing happening now in the lithium industry? Like this type, I call it Mount Holland. It could be something else, but is what you've got similar to Mount Holland style? If I can use those words.
I don't know a lot about Mount Holland.
Okay.
I know that I'd like ours to be. Look, I guess. I mean, they are Western Australian pegmatites are gross, apart from green bushes, which is an anomaly.
Yeah.
They are similar in a lot of ways. Metallurgically, they're similar. Mineralogically wise, they're similar. 3 or 4 have been previously gold mines and have had pegmatites found on them.
Yeah.
So, I mean, there's a similarity there as well.
Oh man, I remember drilling and we hit a pegmatite and we go, oh geez, that's another
bloody
pegmatite.
pegmatite.
You know.
Yeah.
So.
Yeah, I think. I don't know about similarities, but I think the story is, it's one that's evolving in the same sort of way.
Yeah. I mean, this is so new, different types, and
we've only been drilling since November.
Yeah.
We've just got to April now. It's a story which is very, very young,
Yeah.
very fast moving, I think there's a lot to be done, a lot to be found. Yeah, there's a hell of a lot of work to do.
Oh, I mean, I use the narrative because I was quite involved with the whole Mount Holland story, but when I see your things and I'm saying yours is exactly the same, but I haven't looked at the others in detail. But I thought, oh, jeez, this could be something similar, and you never know because sometimes you start at the mother.
So, yeah.
Well, sometimes you start at the mother lode, sometimes you don't, and But look, $1 million question, mate. How do you take this lithium market? What's your view? Obviously, you've spoken to many people.
Oh, look, it's amazing at the moment, isn't it? I think
Yeah.
you look at where we are today. With, I think 3,000 to 5,000 US being quoted as an offtake price for SB6s. It's an incredible amount of value. You look at you have a 10 million tonne reserve, and you can create 150,000 tons of SP6 a year. You're looking at valuations of 700 plus million US dollars. It's a ridiculous amount. I think that's why you really need to be moving fast. I think the lithium offtake is only going to increase over the next few years. We know that there's a lack of product, and we know that people are trying to secure that. And I think we want to be in a position where we're able to be one of those people who gets secured to one point where we've got our offtake is secured by someone who can then process it. I think, look, where we're going with lithium, I've got no idea. But I see, just in Perth. Perth is always slow on the uptake, but how many electric cars are you now seeing around? How much further do you think that's got to go, and how much more lithium do you think we need? There's other big producers coming on stream, and obviously you're going to see a downward pressure on the lithium price in a few years. But at the moment, it's crazy. It's phenomenal.
I'm learning about the lithium battery market myself because I just got myself a camper trailer, and then you start talking about getting lithium batteries and this and that, and it's you suddenly realise that it's down to the core. Right? Everything's like that.
Everything's got a battery in it now. Yeah.
And I guess in some ways, is there such thing as, I mean, you've touched on a bit, what makes a good project, several factors. Is there such terminology used as a good lithium project, or good lithium or bad lithium, or things that you can't extract out? And is there some refractory?
I think it comes down. No, I don't think you don't have that refraction. I think what it comes down to is how clean your final product is.
The impurities.
Yeah, and then that's one part of the whole process where we probably need to learn a bit more. Is the offtake and what really is a requirement, but that'll happen this year, and we'll look at people to come in and help us out with that side of the aspect of the process. And I think I think you know you're in a fairly good position when you look at your chemical analysis of your SB6 of the con you're producing. We're fairly soon we'll be able to have an idea of where we are with that, and so there are obviously better ones and worse ones, but and it comes down to impurities and quality that you can provide. But I think as long as you're getting a fairly clean spodumene concentrate, you're in a good place.
Okay. I mean, I have a question here. Is how should investors temper their expectations of your development or this kind of style of development? Because investors are very, hey, don't worry about the details. Let's just do this. How much more intense? Because sometimes people think it just takes you, 2 minutes to do this, but it's actually a 2-day process, right?
Oh yeah, it's a long process.
Yeah.
I think how they temper, like I said before, we're moving along a pathway where we want to be in a position by the end of the year to know what we have, and that's as much as we can give on the investor side. I think you've got to be realistic. You can't do it in 2 days, and there's a lot of pressure to do it in 2 days, but you can't. And I think
all of them out there wants you to do it in 1.5 days.
Yeah. I think there are time frames, and there are. I think the technical aspect of it, whether you're looking at downstream, like your labs and everyone's backed up. So you can't get your answers straight away. You have to wait. I mean, hopefully, like I said, we'll be putting out as much information as we can in Q2, Q3, Q4 this year. Yeah. And really, from my perspective, I want to know where we're at by the end of the year. Yeah. And I want to be able to say, okay, we're another them or we're another one of those guys, and that's what I want to be doing.
I think that frustration's on both sides of the table, right? The investors are impatient, you're impatient, because you want to know as much of that info as you can.
We're aggressive, we're very aggressive. Yeah. We've been drilling flat out since we started the project. You can't really ask much more. And we've got 2 rigs on site 24/7. And, we're probably going to increase that again now. We've got a 3rd rig coming into the Air Corps program. There's only so much you can do in a space of time, and we can probably go a little bit faster, but we're being, we've got those other things, other factors to take into consideration, which is lab results, investors' money, making sure we're spending it properly, and those sort of things. So we want to make sure that we do a good job as well as going as fast as we can. Yep. And I think we are. The money's going into the ground. It's certainly not going anywhere else. We don't have massive overheads. Our company is lean. We run a pretty tight ship. So.
The other thing that I want to touch on, but obviously it's a no-brainer where the focus of the company is at this point in time. But
it is.
Malnada is a gold project.
It is
as well.
Yeah, and it's a good one. Yeah.
And a good one, because when I look at the resource, you got 141,000 ounces at 13.8 grams a ton. At indicated, you've got 81,000 ounces at 18.6 grams.
Yeah.
So those kind of numbers are pretty good.
They're very good. Yeah, that's why we went after the asset.
Yeah.
That's what really attracted us. You look at the success that the directors had with their last company, and they sold 300,000 ounces for a lot of money. So high grade gold in Western Australia, it's very attractive. It's high margin material, and the asset at Mount Ida is what really attracted us to it, and what I find is very attractive is the fact that it hasn't been drilled very deep. You look at the average hole depth is about 75 metres from surface. That's the average over the database we were given. And then you've had an old mine, Timoni, which has produced 250,000 ounces at a very high grade, and only been mined down at 250 metres from surface, and it's open. It's open to depth. It's been offset along strike. There's no reason why you can't have repetitions of this thing. Very little information has been gathered and about structurally what's happening. And where the extension of the mineralisation could go. There just hasn't been enough drilling, as simple as that. And so you've got a copper-rich, very high-grade Baldock, which hasn't been. Probably the thing that saved it for us is the fact that there's the copper in it. So you can't treat it economically or effectively very well in a CIL plant. You have problems with copper chewing up your cyanide, etc., etc. So I think that leads in our favour, because we know that there's potential for that Baldock and Meteor ore bodies to have 300,000 ounces in them alone.
Yep.
And then there's the oxide portion of it, and we've hit mineralisation, further out. We haven't got the assays yet, but we know that this mineralisation extends. We know that we have another project about 4 kilometres northwest called the Bombay, and okay, it's not fully understood yet. Maybe it doesn't continue at depth, but there's still 500 metres of oxide material at surface there. And there's been very little exploration work done on this package of ground, both on the eastern side. We have a project, a small asset on the eastern side with 25,000 ounces as well, and that's only been drilled down to 50 metres from surface. So, as a gold project, I think it stands to reason that you could potentially have a standalone gold operation there as well. And so that's what's, high grade narrow vein gold, Western Australia, fantastic story.
How did the gold sit spatially to the lithium? Are they?
Good question. I think the gold sits in a northwest southeast trending package of sort of 4 or 5 shears. Okay, they sit within both the north-site hosted and amphibolites. So mafic units which are running sort of parallel to the granite. The lithium-bearing pegmatites are running sort of maybe an east-west sort of orientation, and they cut through the gold lodes. Okay, so spatially they're very close, and at some point you will drill a pegmatite and a gold lode in one hole, which was what you saw in the first hole that we analysed, the IDD002, that famous hole, 21.7 metres at 2.1% lithium, and in the footwall, just out of the footwall of the lithium, we had 3 metres at I think 12 grams gold and 2.8% copper. So spatially the gold lodes are obviously in place before the lithium, and then once there was emplacement of the granite, pre-existing faults that are sitting there, then we have these emplacement of lithium pegmatites cutting through the gold lode. So there is potential for you to have both commodities in one pit going forward. Pit, underground, whatever it may be, in a mine. And that's also quite exciting, because it gives you that idea, a bit of flexibility. Maybe one asset can help pay for the excavation of the other one. Yeah.
Okay. And where is that sit in the list of things to do at this point in time?
Gold?
Yeah.
It's probably a number 2.
After the dot points, sub 1, sub 2?
One is lithium, 2 is gold.
Okay.
It's definitely something you can't forget. On gold's $900 an ounce. It's a valuable asset, but at the moment the focus is lithium.
Yeah.
And it will continue to be for the foreseeable future. But we can have a stopgap there where we decide that we'll go and put some holes in the gold, and we will be reporting gold assays going forward. But at the moment the focus is definitely.
It's a good problem to have.
It's a nice problem to have, yeah. It's a nice fallback position.
Yeah. All right, so I mean, going forward, you mentioned you got intense drilling happening. Yeah. Can you just give us a quick rundown of what investors
sort of
could
milestones to look for?
Yeah,
I think where we want to be at the end of this quarter is to have a lot more drilling results out. And that's the key, to probably get all of the western pegmatites, the assays back from what we've done so far. Have our geochemistry done, at least our lithium index work done, so that we have, on the area that's amenable for geochem, so that we have some target development and generation completed there. Have our air core program up and running, and hopefully have some information back from that. Metallurgy test work, first side of test work is going to be up very shortly. That sort of is what I see as a big de-risking phase. And then quarter 3 is really, it's the key part of the year where we've been doing resource estimations and also submission, and hopefully we'll be getting the test work back from a more comprehensive round of metallurgical test work, which we're putting in. We've got about 2 tonnes of core that we're collecting at the moment, which will be submitted for test work probably at the end of this month, hopefully, depending on if we can get everything done by the stage. And so that's really our pipeline and news flow that's going to be the next 6 months.
Okay.
And then, depending on where we're at with that, we decide whether we move into some sort of economic analysis of where we are, or whether we continue with exploration and development.
I mean, when I checked before we started, your market cap's about 212 million, somewhere around
That's
there.
about right.
How does that sit well? I mean, you've talked to a lot of brokers. A lot of brokers talk to you, and you've just said you've raised some money.
Yeah, we've got about 25 million in the kitty at the moment now.
So, what are they feeling? Are they saying, "Hey, mate, you guys are still so cheap," or what are they saying that you could express to us?
Yeah, I think we're cheap for sure, but we're in a position where we need to take the next step now as well, and make sure we, for us to move up the list, we've got to now show the size potential and now show the amenability to processing, I think, and that's what we're aiming at doing. Sure.
I guess the question of how big do you think Oneida will be? It's a crystal ball question, and
yeah,
so mix that answer in that pitch. Now, if you got a bunch of guys out there who are sitting on the fence, this is my sort of ending question: is what is your pitch to them in terms of you should look at RDT?
We've only been exploring for 4 months, okay, and you see what we've done so far. Canaccord put our note on us saying, they're comfortable with 8 million tonnes there at the moment. I think I'm comfortable there's a lot more than that. That's where my pitch is at the moment. But if I'm going to put out an exploration target on what we have, then I'm going to need a bit more information in my hand before I do that. So it's a short wave, but I think somewhere in the next 2 months we'll have that out there in the market. And look, upside potential is massive at Mount Ida. We've only just started exploring. We've really just touched the surface. We've only drilled the stuff that's been sticking out of the ground or in previously drilled drill holes.
Yeah.
And really developing our own exploration models and targets hasn't happened yet. So really, you've got 30 kilometres of strike to cover, some great ground, and I think that's really where the pitch is. Its upside potential is enormous.
Mm. Yeah, I remind guys when I did some work with Galaxy down, when we first rocked up, they just drilled to a certain layer. There was one pegmatite. By the time I left, finished the project maybe 3-4 months, they've had 3 sets of projects underneath each other. So the potential could be whatever.
We haven't found the limits of the ones that we've drilled so far.
Yeah.
So, really, it's just it really is just a process of keep stepping out.
Yeah.
And
okay. Look, Matt, thanks for enlightening us. You're the first sort of lithium story we've had on the platform.
Great.
Which is why I sort of had a lot of these 101 kind of questions, and I hope you don't mind us chasing that. But look, I've worked with Florence Drummond, and she's started Indigenous Women for Mining Resources, and we talked about how we can help each other. And being Coffee with Samso, I said maybe we can get some Indigenous business to provide us with coffee, and that's what she has.
Oh, good on her.
And this is your parting gift for
fantastic.
Being silly enough to sit in front of Coffee with Samso.
Good on you. Thank you very much. Thanks for having us.
All right. And we'll hope we can follow the journey and have a wrist talk down the road.
We will.
Okay.
Cheers.
Thank you.